Okay, guys, it's Angelo Christian here with another episode of Real Estate Insider. Today I have the one and only Mr. Larry White with Carrington Real Estate Services. Hey, brother. Hey, thank you so much for coming in.
Absolutely. Pleasure to be here.
Yeah, man. I actually, Carrington, I've seen they've grown massively in the last 5 years. I didn't even know there was a real estate side, so I'm very anxious and intrigued to learn more about what you do. They are one of our competitors, but they I've seen, like, in the last, like I said, probably last five. I mean, their market share, I think, has grown considerably. I mean, everywhere I see them, they're on Google, they're on Facebook, they're on the internet, and
there's a lot of cool stuff going on over there right now.
Yeah. So kind of tell me, I'm just, what you do with Carrington, what's going on with the company, and that type of stuff. So that our viewers would love to learn about, what you guys do.
Yeah, absolutely. So I'm the regional vice president of the real estate company.
Okay.
Real Estate Services. And we, on any given day, have somewhere between 1,500, 2,000 agents across the country.
Okay.
A little over 40 individual offices.
Okay.
And my job, is to make sure that we add value to our agents.
Okay.
I think there's a kind of a lack in our industry of professionalism.
Right.
Right.
I agree with you.
And where, consumers are kind of wondering, what does the real estate agent do?
Yeah.
Like, why do I need them, or do I need them?
Right.
And so, in any industry, you can either, compete on price or value. And I want all of our agents to add as much value to our consumers as possible by educating them on the market, by letting them know, by being able to negotiate the best terms for them and get our clients the best deal at the end of the day.
Okay, so kind of walk me through. So, because you're on the real estate side, someone calls in to get a mortgage, they apply. The loan officer gets them pre-approved. Mm-hmm. How does your back office, or how does your department come into this?
So, I mean, we are sole and separate, right? Now they're a sister company, so we work together a lot. We do a lot of sharing of leads to where our agents will come in and say, as they're pre-qualifying a customer, oh, you haven't got qualified, and we'll send business over to our sister company, and then vice versa. They buy a lot of leads. They generate a lot of leads. Oh, you aren't working with a licensed real estate agent? Well, I have, some choices for you here. So, but we don't operate, side, like, in the same line. Like, they're definitely two separate companies. But we work together as closely as we can.
Okay. So when you say that, I mean, the purpose, how does the real estate side generate revenue? How is it driving revenue? So,
when we started in 2008, we were strictly, if you know any history of Carrington, we started by purchasing non-performing notes back before they were popular, right? And now, like, everybody's buying non-performing notes at this point in time. We were doing it before it was kind of trendy. And then we acquired New Century, which led to a number of different platforms: an asset management company, a title and escrow company, mortgage lending, wholesale lending, property services, property management. And the last piece there in 2008 was actually the real estate arm. So when I came into the picture in 2010, we were about 90% default or foreclosure business. Now, as you know, like, everything's always cyclical. So that was a very short-term business model.
Yeah.
So myself and some of my colleagues, it was our job to kind of diversify and help our agents kind of branch out there to do more business. And it's been a very successful story. I mean, when I started, we had 386 agents. We've peaked at about 2,500 agents at this point. And only about 20 to 30% of our business is that default or foreclosure, because it's not it's not a trend right now. So we have to teach our agents, like, how to add service to help traditional home buyers and sellers out there in the marketplace.
Okay. And so now, are these realtors, they're employees of Carrington?
Not employees, they're independent contractors.
They're independent contractors.
Yeah, similar to any of my competitors, the Berkshires, the Sotheby's. Yes. So we have independent contractors under our umbrella.
Okay. Okay, so wow, so then you're one of the pioneers that's kind of helped to grow this or spawn this.
Yeah, it's been a fun journey to kind of watch the growth, as you indicated. Like you've seen Carrington grow, and all of the different companies
Wow.
have grown astronomically.
And is Carrington's publicly traded?
Nope,
They're not. They're
nope,
private.
we're a
Okay.
private
Okay.
company.
Okay. So I mean, no, talk to me on that because that's something that I've been very curious to learn. How do you like you've scaled the business? You've been there 6, 7 years. Okay.
Going on 7 years.
And it seems like you've grown it sixfold, something like that with your headcount. I mean, how do you? Because I'd love to do that with my business.
Sure.
And I'm trying to figure out. That's one of my.
I saw your notebook, 10x, right? Like 10x growth. I love it.
Yeah. So I'm trying to figure out, how do you, what's some of the secret sauce in scaling a business? It seems like you're very knowledgeable.
So to me, right, it doesn't matter if you're an agent, a company, a loan officer. Going back to that value proposition, like how do you add value? If you add value, like you can do all kinds of gimmicks. I'm never big on that, right? I'm not going to be the king of the discount listings because then that's like I would rather compete on value versus price. And so I want clients to come and use us because we get them the best deal on their houses. We negotiate the best terms for them. Or if they're listing the home, because we sell their home for the highest amount possible because of our marketing exposure, and we drive as much traffic to it as humanly possible.
Okay.
And so, I mean, to go back to answering your question, it's about adding value. My clients right now are the agents.
Right.
So
Right.
whether you're going after a home buyer or seller, you have to add value to them. I'm going after agents to say, how can I help you take your business from 4 deals a year to 8 deals a year, 6 deals to 12 deals, right?
Okay.
And make sure that we're making a succession plan so you run it like a business. Because what you see in real estate and mortgages as well is you see, the producers do all the right things in the beginning. They're calling clients, they're touching base with people, they're doing open houses. Then they start to get busy, and then they stop doing those things because they're busy. And then all those deals close. Oh no, I got to start over again, right? And so you get this up and down roller coaster. And it's about creating kind of that game plan and path to continue an upward trend.
Okay. Is that something that you help them with, or?
Yeah. So I work with every one of our office leaders on coaching, training, mentoring our agents on that side. I also like Tom Ferry, the nation's leading coaching company out there, is a good friend and mentor of mine.
Okay.
And I joke with him all the time. I'm like, Tom, my job's to put you out of business. He's like, Larry, like, what are you talking about? But if I had the company, that could provide the best coaching, mentoring, training at a local level there, then like the agents wouldn't have to go outside. I don't think that will ever happen. There will always be a need. What Tom does is amazing, and it shows in his numbers because he's created a systematic approach for increasing agents' business. So I take a lot of what Tom and I have worked on, talked about, and we implement it back into our business to get similar results for our agents.
I mean, and just real quickly, is there some key takeaways or bullet points? Because I mean, how does somebody? Because I have the same problem with my loan officers.
Sure.
I mean, they come in and we hire, basically kids out of school, entry level. We train them, and we keep seeing this cycle where, like you said, I have classic example, a loan officer built up a multi-million-dollar pipeline, then went to go nurture that, closed it out, and then was flat for the next 2 months.
Right.
And I said, I started in the business as an originator, and I used to sell loans at New Century.
Gotcha.
But the thing is that my anecdote was you always have to, and I know it's cliche, always be selling, but always constantly be originating and get a team under you to help you to kind of facilitate. So what, from your side, because you built a much bigger business than me, what is it? I mean, if you could just touch on it. Yeah.
So, I mean, the first and foremost is the accountability, right? It's not that people don't know what they should be doing. It's that they get sidetracked with the nurturing. You talked about the nurturing of the business, and you got to look at where your highest dollar productive behavior is each day. And that's on lead generation and bringing those deals in.
Yeah.
So we'll sit down with agents and we'll formulate, okay, every day, like you have to make a minimum of adding 7 people to your database. And then you put them on this drip campaign, you do this, and the odds are that your competition out there isn't going to do that same thing. Having the right database on the backside is huge to make sure even when you get busy, it's still touching base with them and letting them know that you're there. Connecting people on social media, right? Like touching clients so that when that time is right, because a lot of people will start their search and they're not really ready.
Right. You're right.
And so agents will say, oh, well, you know, like it's a bad lead. Well, it's not a bad lead. It's a bad time.
Yeah. There you go.
It's not the right time for them.
There you go. Yeah.
And because the average online lead is 9 to 13 contacts before they convert. So if you look at that, let's say one agent takes them from 1 to 4 contacts, another one from 4 to 6.
Right.
And then, so it's the 5th or 6th agent that actually just gets lucky.
Yeah.
I want to make sure that our agents are there for all 13 contacts for that particular client down the road.
Okay. No, that's awesome. That's awesome. I agree with you completely on that. Now, let me ask you this. So let's say that, and I don't know as far as your benchmarks for performance. What do you do, like if, let's say that the average agent or your expectation is that, for example, they need to be doing 5 deals a month. If they're not meeting that, I mean, do they just, is it adios, see you later, or do you work with them, or how do, because do you want everyone, do you only want A people on the team, or do you have B and C? I mean, do you look at things like that?
I absolutely do. I think a healthy business model, like if you only have A players, right, that are doing this bulk of the business and you lose an A player, like your business dips, right? If you only have the new people, yes, your margins may be higher, but they're not going to do as much production because they have on-ramp. And then you have the middle tier that are kind of slow and steady and consistently to grow. I think that you have to have a healthy mix of all three to diversify so that you're not kind of reliant on somebody there. But we definitely look at that. And we basically break our business up into 4 quadrants. And we're always focusing on quadrants 2 and 3 to get them up to, like, we want to get people going through the quadrants over and over and over again. And there's a model for that.
Yeah.
But what I've learned from Tom and coaching and training, it's that accountability. Like everybody falls off the wagon sometimes, but it's coming back and saying, okay, Angelo, like you didn't make your calls yesterday. Understand, we got busy. Can we get back on it today? So that it's a 1-day blip instead of a 2-month blip, blip on the schedule.
Okay. And so like in that accountability, because you've mentioned that word, that's a huge thing. I mean, let's say that the person is not, you're coaching them and they're not performing. Is there a process to kind of how you handle that if they're not meeting those benchmarks?
So yes. So I have to be careful, right? Because all of my agents are independent contractors. So I can't say, you go make 50 calls a day. Like that's how I started. I was young and dumb and my mentors were doing 100 deals a year. I was like, oh, I want to do 100 deals a year, right? And what do I do? They're like, call 50 people a day. What do I say? And they would hand me a script. Hey, this person said they want to talk to me. What do I do now? Right. And so it was just going through the repetition and learning those sales process. It was something that I wanted. Right. So it really depends on your why. And what I find speaking with agents across the country is I ask, like, what do you want to do this year? Oh, $100,000 seems to be kind of the benchmark, right? Like make 6 figures. And my question to them is why? What does 6 figures allow you to do now that $60,000 doesn't? Because if that why is not big enough for somebody, no matter what profession they're in, they're not going to do the things that other people don't want to do. So that's where we get into goal planning and setting and the whys behind it. So we can figure out, okay, is this to put your kids through college, right? Is this to make sure that your kids eat, right? Because if you're like, oh, I don't really want to make calls today, and you start thinking about, well, is my kid going to eat today? All of a sudden you turn around and you start calling, like maybe you pick up that phone a little bit faster.
So probably when you're bringing someone on, I mean, that's probably a conversation that you
Absolutely. Finding out what their goals are, what they have to do from last year to change in order to get those, and how committed they are. Are they committed or interested?
Now on that, because I'm just finishing up reading How Google Works, Eric Schmidt.
Okay.
And one of the things that he talks about is that you need to be spending 80% of your time on, the biggest revenue drivers, like you said, calling leads, originating.
Sure.
So, but they do. He makes a very clear point that they would make a huge distinction between hiring good and great,
Mm-hmm.
and separating those lines. Will you bring in someone that's maybe like a 6 or a 7, or does everyone have to be like an 8 or 9 or a 10?
No, I will, because a lot of those people are like, they've done something successful in most accounts. Like, what can we do to get them over that edge? And that's kind of diversifying, right?
Mhm.
I'll even take the people you talked about, bringing people new,
Mhm.
and I love, like, I want to get those people to be the superstars.
Yeah.
Right.
Yeah.
I want to constantly upgrade our talent, constantly have bench strength. And when I look at that, I'm constantly looking at, like, okay, who's my replacement?
Uh-huh.
Right? Like, let
Mhm.
me train my replacement.
Yeah,
A lot of
sure.
people get scared, and they're like, even on real estate teams, right? They want to be the keeper of everything. I
Yeah.
want everybody on my team to be stronger than me.
Mhm. Mhm.
Like, how do I bring everybody else up? Because
Yeah.
if I know that everybody else on my team is stronger at one particular aspect,
Uh-huh.
like, I'm in a beautiful position at
Yeah.
that point in time.
Yeah. What can you talk to me some of the core values of the company, some of the things that you guys make as far as what you focus on?
Yeah, absolutely. We have four driving principles, and we
Okay.
go by the acronym FUEL.
Okay.
So it's having fabulous fundamentals for the F, exceeding expectations, unparalleled service, and leveraging opportunities.
Okay.
So
Okay.
those are kind of our 4 key principles that we work off of, and that everything is based around. If we have default business, if that's the trend right now, how do we leverage that? How do I help an agent do an open house
Yeah.
and get 110 leads through that open house, so that they're diversifying that one potential piece of business into a couple of other different platforms?
Mhm. Mhm.
Or if hedge funds are buying, how do we capitalize on
Right.
that?
Right.
If it's a seller's market, what can we do right now to help not only sell homes, but get those people into other homes? Because that's a big fear right now. Well, if I sell my home now, where do I go?
Right.
Which is keeping a lot of people on the sidelines.
Yeah.
So it's kind of constantly looking about, what's our trend now? What's the next trend?
Right.
And how do we take advantage of that?
Wow.
Constantly looking forward.
Okay. Now, that's one thing we're talking a little earlier about. It seems, are you an economist?
I'm not an economist, so
Okay.
I don't have the data.
Okay.
I
Yeah.
look at a lot of trends,
Yeah.
and I like
Yeah.
to use common
Yeah.
sense,
Yeah.
right? I want to look and see. So we were talking about
Yeah.
some of these trends from 2003
Yeah.
to 2005, and there's a lot of similarities now. And I was just on a panel, and I actually had a short debate with the chief economist from Fannie Mae. And it
Oh,
wasn't
okay.
good or bad. Like, it was very respectful.
Mhm.
But his trend was, like, healthy market for X amount of time. And I was like, I don't know if I agree with that, because the same headlines in 2003 are similar to the headlines that we're seeing now. Record high sales, like buyer or like,
Yep.
like consumer optimism,
Yep.
etc., which is great. I say take advantage of it, run with it, but also look at what happens, because after every good cycle comes a
Yeah.
bad
Yeah.
cycle, right?
So,
Mhm.
and that's one of the things that we talked about, because I mean, I'm seeing a lot of my mortgage business where people are 20 multiple offer situation
Right.
on a little house in Arlington, or a little tiny home in Orlando, where you can't even you can't get concessions. You need to close in 2 or 3 weeks, or it's a cash deal.
Right.
And people are struggling or fighting to try and buy a house. So are you thinking that, I mean, a recession is imminent, or what?
So our market is always cyclical,
Yeah.
and our average market cycle is 8 to 12 years.
Yeah.
Now, we had such a big swing last time. I can't tell you that, like, we're 10 years into this.
Yeah.
I'm not predicting that it's happening in the next 2 years, but there's a lot of warning signs.
Yeah.
One, the lack of inventory, which we talked about, like, across the country,
Yeah.
especially for first-time home buyers.
Yeah.
Right? Entry-level
Right,
positions,
right.
entry-level homeowners
Right.
that are just getting into it.
Yep.
There's the market prices are going up, interest rates are going up, which limits their buying power. And, in the last recession, home builders pulled back so much. We went from record building permits to crickets out there. And now they're like, oh, people are buying. Let's get permits. Well, we're 4 years late on this, guys. It's like we should have had these thought processes 3 or 4 years ago to be planning for this, because now we have increased land values, building materials have went up, and cost of skilled labor is higher than it's ever been before, right? And so now you're seeing new home communities 300,000 up, which is great, because those companies still have to make their margins. Understand it's a business, but who's buying that product? That's not, 90% of the population out there that can go in and just buy that off the bat. Also, like, politics is just a whirlwind right now. And not that I want to get into politics per se, but depending on our tax reform could either expedite or expand our cycle. The wall that's been talked about since the election, if that wall goes into place, where do you think they're pulling the skilled labor from? Across the country. What do you think that does to your inventory and the prices in those economies, right? All of a sudden that jumps up even higher. So like I said, I can't predict what exactly is going to happen, because there's so many variables. But this is where our real estate professionals need to be educated. And they need to know, if some of these things happen, what it will do to and for our clients.
Now, and that's what I guess one of the things that's coming to my mind, like when you're telling me this. So, like, I know this now. What should I do? How do I trade it, or what do I need to do, or what's the trade, or what's the deal, or what do I need to stay away from something, or what do I?
So I never think that the market is good or bad, right? It's just different. Right. My past two out of my 3 homes that I've purchased in the last 6 years, I've paid over asking price. In markets where traditionally people haven't done that. It was perfect for me. It was the school districts I was looking for. It was the house that I wanted. It had all the dimensions. It didn't matter to me whether the market went up or down, because it wasn't about that. I always made sure that it cash flowed in case I needed to get out. I wanted to make sure that I could rent it out, and I wasn't going to be forced into, a tough situation. So that would be like, make sure that you have an exit strategy. Right? Because if the market does turn, what do you do then? Not being, a doomsday prepper or anything, but just having all of your exit strategies in place. And that's what scares me right now. When I see people bidding 20% over asking price, 20% over appraisal. I had a client with a buyer's agent in Seattle, Washington, $200,000 over asking price, waiving all contingencies, and did not get the deal. Like, that's a red flag to me, because those clients that purchase that have no exit strategies. They have no, like, even if the market stays flat, they still don't have an exit strategy. If they get laid off, if they're in sales and they take a reduction in pay or something like that, there's no way to go except for default. So default's at such a low right now. These things, along with loosening of financial guidelines and stuff, will naturally bring default rates back to a normal level at that point.
You're right. That's something that we talked about too, that, I mean, you and I are both or know a little bit about lending, and it has the mortgage guidelines have somewhat, to a degree, loosened up a little bit in the last probably few years. And I mean, every day I get an email from another investor that has a no doc, and that's kind of what you saw, back in 05, 06 was, I mean, if you had a pulse, you got a mortgage,
right?
And
so,
I
don't think we're there yet, but there's warning signs, right? Like going down to a 550 FICO score, no docs, stated income loans. Like, you're seeing these you're seeing home equity lines of credit, like personal friends and family. Oh yeah, we just we just took money out, in order to put a pool in. Like, these are the same cycles that happened last time. Another interesting cycle that I'm seeing is, I'm seeing more real estate investors
Yeah.
than I have like if you're getting in to be a real estate investor now, I'm saying that you missed the boat.
Yeah, missed the boat. Yeah.
Right? As Warren Buffett says, like you want to do things when everybody's not doing them. Like
right.
not everybody can, now that the market's going up, you're seeing real estate agents come in, real estate investors come in because it's popular. People are assuming it's easy, which will also be the first people that get out of the business as well.
Do you do anything like with investing in the markets or trading or anything like that?
I dabble here and there. I try and stick to my specialties, which is more on the real estate side of things. So a lot of real estate investing, but I do. And I mean, the markets are bananas. The S&P 500.
Yeah.
Right. I mean, at one point they were like, oh, it'll never hit 2000. Right. And now they're like, oh man.
Yeah.
So this is the consumer optimism that is going on across the country right now.
Yeah. No, I'm that's crazy. I don't know what to say about it. Now I know that another big thing that you mentioned that you really lean into technology.
Yes.
That's a huge thing. And you're talking about some fascinating things. Could you mind like talking about that? Like some of the things you're passionate about?
So I love technology because I think it helps us work smarter, more efficient. And there's so many like cool tools that are coming out right now.
Okay.
So a couple of the ones that I'm watching, actually, so you talked about the, diversifying other assets. I own quite a bit of stock in a wearable, it's called Vuzix. It's a wearable eyeglass company that uses virtual reality.
Vuzix?
Vuzix, I believe.
Okay.
And it's fascinating. Like if you look at their commercial, they show an older woman like put these glasses on, go under the sink, and instead of calling out a plumber being able to see that and then highlighting and saying, hey, loosen this bolt by using this tool. Right? So, and I think that's years out, but I take a look at that and see how that works with real estate. Because in the next 5 years, I don't see a buyer's agent going and showing 20 homes to somebody, taking 2 days of their time. I see them bringing them in here and saying, hey, let's take a walk through these 10 homes. Right now, we're limited because of there's not enough footage out there, right? So these virtual reality companies, it takes about 45 minutes to shoot a 1,500 square foot home.
Okay.
So you're limited on the amount of homes that have this. But like I said, I see families coming in, walking through these homes together.
That's amazing, yeah.
So now I can show 10 homes in an hour.
Yeah, that's good.
Where it used to take me 4 to 6 hours type thing. And then, take that one step further, lead generation, right? If I'm the only person that has virtual reality on my website, do you think clients are going to spend more time flipping through pictures or actually walking through the home? Right now I become sticky, right? People are spending more time on my website and doing more there.
So this company offers this?
Vuzix, no, that's not so much on the real estate side of things.
Okay.
There's a couple of cool companies that I've been researching. One's Matterport, which is targeted towards virtual reality, and we have that in a few of our Southern California offices. And then Transported is another new company that's coming out as well.
Oh,
and there's
amazing.
Probably 50 others. Like new tech, but those two are very cool that I've seen so far. The other product that I like is artificial intelligence. And I've ran these side by side. So have you been to a website where the little chat bubble comes up and it says, how can I help you?
Yeah.
And so that's pretty popular. People tend to like that. But anytime you have humans involved, there's error ratios. And so I ran, there's another cool company called Automobots.
Okay.
That's out there. Similar little chat bubble pops up. But as it asks questions, the artificial intelligence becomes smarter. So it already has like language programmed in it. I'm looking for homes in 77450. Oh, okay, what size? Right? It automatically responds. Within 3 minutes, I had already basically got list of properties and got pre-qualified through this artificial intelligence, and everything that I need. It had captured my contact information and dumped it into a CRM. 3 minutes. Because people like don't want to talk to real estate agents, but when they do, they want it now. And that the speed to lead is amazing with that type. Because using the human, it took me about 17 minutes to get through that same amount of information.
Okay. So do you think that people, like when they prefer this chat robot because it's non-confrontational?
I think that it's a little less, it's a little less invasive.
Okay.
And they can just get the information that they want at that point in time.
Yeah.
So I love artificial intelligence. I love virtual reality.
Yeah.
I mean, and then, you look at companies like Uber, right? They're talking about like carless drivers at this point. I think that we're a little ways out, but the technology is there already.
Yeah.
And when your average age of your realtor is 55 years plus, and then our largest buyer population is millennials, how do we get these two totally polar opposite, to communicate with each other? Because a lot of people are resistant to change.
Right.
And I love change, right? Like give it to me. How are we going to make this better for the consumer, for everybody that's involved in that transaction?
Right. So, I mean, some of the takeaway, because I agree with you completely. I mean, leaning into technology with your business to help to optimize it. I mean, so what would you say for so a lot of our followers are entrepreneurs and business people. Should they start to allocate some funds towards for their revenue towards technology? Should they hire a dev team, or how do we use this information?
So I mean, I don't think there's a black or white, because it depends on whatever industry that these particular business owners are in.
Yeah.
And we got to see what kind of technology is in their particular business. Now, I work a lot with our agents on budgeting and saving and reallocating and reinvesting into your business. And I think that every business owner should do the same. So a portion of their proceeds should go into savings for taxes, right? A portion of their money should be reinvested into marketing, into development or tools, et cetera. And then they should keep, a lion's share of it there.
Yeah.
So I do agree with you there that, there should always be reinvesting, but it's hard for me to paint a broad stroke and say everybody should be doing this, because everybody's businesses, some may be more service oriented, some may be more online. And that's actually what I love. I have a 10-year-old daughter, and I think technology is a game changer.
Sure.
Right? We're seeing some of the youngest entrepreneurs that we've ever seen in our life, because they're able to make millions off of YouTube, right? Off of these social media platforms and stuff there. And so it's creating, although technology may take away some jobs, I think it opens up even more opportunities. And that's what people fail to see on that side.
No, I agree, man. No, that's awesome. And I really appreciate you. You're a wealth of knowledge. I really appreciate you coming out to the studio today to meet with us. Guys, this is Larry White with Carrington Real Estate. This is another episode of Real Estate Insider. How can people find you, if they want to follow you or hook up with you?
So you get most of my handles across all social media platforms is Larry MF White.
Okay.
My contact information should be on the screen somewhere, I believe.
Okay. Make sure we get that on there. Yeah.
It should be on the screen, or you can Google me.
Yeah.
Right. If I'm in real estate and you Google me and you can't find me, there's an issue there, right? But unfortunately, that happens to a lot of real estate agents, right? And so we talk about, what's your web presence look like? When I'm sitting down at an initial interview, and I'll Google, oh, it's good. Okay, well, why can't I find you? Well, what am I missing?
Yeah.
Because if I can't find you, how does a client find you at that point?
No, I agree, man. Thank you so much for coming out together,
Absolutely.
guys. Thank you guys so much. We'll see you guys next week for another episode. Peace out, everybody.